Okay, let's unpack this. For what, nearly 3 years now, talks between Russia and Ukraine have been, well, mostly stalled, right? On and off.
Yeah, it sounds right. But interestingly, we have seen them sit down again recently.
But what's striking, looking at the analysis we've got here, is that even with these renewed talks, Russia seems, well, fundamentally stuck.
Still pushing those same original demands. We're talking, full demilitarization for Ukraine, zero security guarantees, basically the same playbook.
Which, as these sources point out, is just, it's an impossible set of demands, isn't it? Russia has to know Ukraine won't accept that.
Seems like it. So, yeah, a compromise based on this material doesn't look likely anytime soon.
Exactly. And that fact really makes the core question we want to dig into today even more critical for you to understand right now.
Which is, given everything that's going on, how long can Russia really afford this war? Financially, economically.
That's our mission for this deep dive. We're going to try and cut through the headlines, look at the expert analysis on Russia's financial and economic state.
Yeah, unpack the key factors. Where's the resilience? And just as importantly, where are the real vulnerabilities?
Let's jump into the SORC material then. So first off, if you just, glance at Russia's official figures, the surface view actually looks surprisingly okay. You see GDP growing every quarter after that initial dip right after the invasion. It almost seems like they've bounced back.
That's definitely the narrative, the picture Putin wants to project. But experts digging into the data, people like Gis Kessler, for instance, they point out, look, this isn't normal economic growth.
Right.
This expansion is overwhelmingly fueled by defense spending. It's what you'd call a classic war economy.
And what does that distinction really mean? Because growth sounds positive, but war economy, that feels, I don't know, different, unsustainable.
It's fundamentally different. Yeah, unsustainable is a good word. The source material uses the analogy of Nazi Germany in 1944.
Okay.
Record GDP back then, sure, but it was all built on military production that just couldn't last.
And Russia spent almost 7% of its entire GDP on the war last year.
That's the figure cited. Almost 7%, which shifts the focus dramatically away from, productive long-term economic activity, things that actually benefit the population.
7%, wow. The source puts that into context, saying it's nearly as much as the Soviet Union spent on defense back in the 80s.
And we know how that ended. That burden, historically, was a big factor in its eventual economic collapse.
Right.
Think of the economy like a pie, right? As Vladimir Mylov, an economist who knows the Russian system well, highlights in the material. You can't just carve out that massive a slice for defense without shrinking other slices.
Makes sense.
Shifting such a huge part of the economic pie, as he puts it, towards the military, inevitably hits other parts of the economy and ultimately the people.
And yet, externally, Putin works really hard to project this image of strength, doesn't he?
Oh, absolutely.
You see it with things like the massive May 9th parades trying to show the world, look, the West hasn't isolated us, everything's fine.
But the experts whose analysis we're looking at, they make it pretty clear that the image being projected is, well, quite different from the underlying economic reality they're uncovering.
Okay, so beyond those headline GDP numbers, there's this financial tightrope act going on internally.
That's a good way to put it. The government is increasing spending massively to fund the war machine, just pumping money into the system.
Which, predictably, fuels inflation.
Of course. And the central bank's main weapon against that has been jacking up interest rates. Dramatically.
How dramatic are we talking?
Well, before the invasion, the rate was under 10%. Now, it's rocketed up to 21% in just 3 years.
21%. Wow. That must make borrowing incredibly expensive for, well, almost everyone. Businesses, individuals. Chokes off investment, surely.
It absolutely does. For most of the economy, yes. But here's where the source points out a really crucial workaround.
Oh.
They passed a special law, apparently right after the invasion, specifically for the defense industry.
So the defense companies get a special deal. They don't face that 21%.
Pretty much. They get to borrow much, much cheaper. Often the terms aren't even disclosed, but it essentially lets them bypass those crippling high interest rates that everyone else is stuck with.
Okay, and why do that? How does that help?
Well, it helps the state budget look better right now. It means the government doesn't have to show massive direct borrowing costs on its own books at those super high rates.
But wait, if these defense companies are largely state-owned anyway, or partly state-owned, isn't that just shifting the debt around?
Exactly. The analysis highlights that this doesn't make the cost vanish. It just creates this sort of debt bubble within those defense companies.
Hidden debt, almost.
Kind of. And if things go wrong, or maybe just over the longer term as these loans mature, that financial obligation is very likely to fall right back onto the state budget anyway.
So it's kicking the can down the road, obscuring the true cost, not getting rid of it.
Precisely. It's a short-term fix with potential long-term consequences.
Okay, let's look at another really fundamental part of the economy. Labor. People. Putin likes to boast about record low unemployment figures.
And technically, he's not wrong. The numbers are low. But the analysis shows that low unemployment is heavily, heavily concentrated in the defense sector.
Because that's where the jobs are, due to the war.
Right. But Russia faces this double whammy here. Like a lot of developed countries, they have a naturally aging population, so fewer working-age people to begin with.
Okay, the demographic challenge.
Plus, on top of that, you've got this huge demand for labor being sucked into defense production.
So it's an aging workforce and a military drain, pulling people away from other sectors. That sounds like a recipe for shortages elsewhere.
It absolutely is. The source material points to significant labor shortages right across other parts of the economy.
How significant?
We're talking an estimated shortfall of over 5 million people overall. And something like nearly 75% of Russian companies reporting they just don't have enough staff.
3/4 of companies, that's huge. Where is that pinch felt most acutely? Which sectors?
Construction is a big one mentioned. And other sectors that traditionally relied really heavily on cheaper, often semi-legal migrant labor.
Right, I remember reading about that reliance. And these migrants traditionally came from where?
Mostly from former Soviet republics in Central Asia. Tajikistan, Uzbekistan, Kyrgyzstan in particular.
Why them specifically?
Well, generally they have younger populations and often struggling economies back home, which made working in Russia, even under tough conditions, seem relatively attractive.
But the sources mention a pretty grim new twist for these migrant workers now.
Yeah, it's quite concerning. Many migrants, over time, acquire Russian nationality, right? For stability, maybe better prospects.
Makes sense.
But the analysis highlights how that very nationality is now apparently being used as leverage to pressure them into fighting in Ukraine.
Wait, seriously? They came for work, maybe got a Russian passport thinking it would help, and now they face being drafted or pressured into the army?
That's the dilemma many are reportedly facing now. The source gives this really stark example of Kyrgyz street sweepers in Moscow, apparently fleeing the country very quickly right after getting their Russian passports because they were terrified of being sent to Ukraine.
Wow, so that labor pool is drying up or becoming much more fearful.
Seems so. And as a result, Russia is now apparently having to look much further afield. The source mentions looking towards South Asia, maybe for construction workers now.
And on top of all that, don't sanctions also make it harder for the migrants who are still there to send money home?
Yes, that's another layer. Sanctions complicate the legal channels for remittances, sending money back to their families, which, reduces one of the key incentives for them to be working in Russia in the first place.
So pull all that together, the aging population, the defense strain, the migrant situation, what's the overall impact?
It just creates this real constraint on the non-defense economy. It means potentially reduced production in those other sectors, and it puts a kind of ceiling on any overall economic growth that isn't directly tied to the war machine itself.
Okay. Shifting gears a bit, let's talk about Russia's external position, its dependencies. With Western companies largely gone, who's stepped in?
Primarily China. No surprise there, really.
How visible is that shift?
The source mentions seeing visible signs everywhere. Even gives this small but telling example of, Chinese traders being prominent at a recent toy fair in Moscow. Just shows how they're filling the gaps across the board.
Right. And what does that new trading relationship actually look like? What's being traded?
Well, China is selling Russia a lot of the stuff it can no longer easily get from the West. Think electronics, machinery, various consumer goods.
And what's Russia selling back?
That's the crucial part. Russia's export basket to China, and elsewhere really, is heavily concentrated. It's overwhelmingly oil, gas, and coal, fossil fuels.
And those fossil fuels are still bringing in a lot of money, presumably. Essential cash for the war.
Absolutely essential. The source mentions a figure around 242 billion euros still coming in from oil, gas, and coal exports. That's vital income for financing the war effort.
But aren't they selling it at a discount now?
They are. China and India, who are the main buyers now that Europe has largely pulled back, are purchasing that Russian oil at significant discounts compared to global market prices.
So Russia's selling the volume, maybe, but making less profit per barrel than they used to?
Exactly. Less bang for their buck. so to speak.
And because oil, gas, and coal are basically Russia's main source of export income, I mean, they don't have a wide range of other high-tech goods or services to sell globally.
Right, which makes them incredibly reliant on these energy exports, and by extension, heavily reliant on China and India as the primary buyers willing to take that discounted oil and gas.
So how does China view this relationship? Is it an equal partnership?
The analysis suggests not really. While China might appear, somewhat benevolent towards Russia on the surface, they seem to view Russia as a much weaker economic partner now, a junior partner almost.
And then China isn't likely to stick its neck out for Russia if it clashes with China's own interests, especially with the West.
That seems to be the assessment. China maintains a careful distance, avoids getting too closely entangled. The relationship looks driven much more by Chinese pragmatism and self-interest, not some deep ideological alliance.
So China gets cheap resources, Russia gets a market, but it's a dependent relationship for Moscow.
Very much so.
Yeah.
There's little sign of China would jeopardize its own crucial economic relationships, particularly with the West, just to prop Russia up if things get really tough.
Okay, so that's the dependency angle. But what about the prices themselves? Oil prices are notoriously volatile.
Hugely volatile. And the source definitely flags this. Falling oil prices put immediate direct pressure on Russia's budget.
How direct?
Well, if oil prices drop significantly and stay down for a while, that would fundamentally undermine the financing of the war. It's probably the single biggest external economic vulnerability they face.
So the source doesn't talk about like one specific oil price number, a single tipping point where the whole economy just collapses.
No, it's framed more as a series of sliding scales. Think of it that way.
Sliding scales. Explain that.
Lower oil prices, rising labor costs and shortages, that hidden debt building up in defense companies. These aren't necessarily sudden cliffs the economy falls off. Instead, they each contribute to a growing budget deficit. They increase the cumulative economic pressure on Putin's regime.
So it's less about predicting one big crash and more about understanding, as Kessler put it, how hard does it pinch across all these different areas.
Exactly. It's the accumulation of pressures that matter.
Okay, so let's try to bring this together. Looking at the whole picture, you've got the war economy masking underlying issues, the financial gymnastics creating future debt problems, the serious labor shortages, these big external dependencies on China, and energy prices.
Yeah, summing it up, there are definitely clear signs that the pressure is pinching in multiple areas simultaneously.
And normally you'd think that kind of growing economic difficulty would eventually make a country more willing to negotiate, right?
Yeah.
Maybe compromise.
That's the standard logic.
Yeah.
Fighting a long war gets a lot harder when the money runs tighter and your domestic resources people, materials are stretched thin. It should increase the incentive to find an off-ramp.
However, that economic reality seems to be running headlong into the military reality on the ground right now, doesn't it?
It does. The analysis points this out very clearly. Right now, Russia appears to be pushing Ukraine back on parts of the battlefield. They seem to feel they have momentum.
And because they feel they have that military momentum, which they see as their main leverage,
they have basically no immediate incentive from their perspective to stop fighting or offer significantly different, more compromising terms at the negotiating table.
So they stick to the maximum demands we talked about at the start.
Precisely. They're pushing those because they feel they currently have the upper hand militarily, regardless of the underlying economic strains.
Okay, so let's just quickly recap the key economic pressures we've identified based on the sources. There's the inherently unsustainable nature of the pure war economy itself.
Right. Then the financial strain, kind of hidden by those defense borrowing loopholes, but it's still there accumulating.
The mounting labor shortages, driven by both demographics and the war sucking people in.
The deep dependence on fossil fuel exports, which ties them closely to China and makes them vulnerable to price swings.
And that vulnerability to oil prices specifically.
And crucially, as we discussed, remembering it's not about one single tipping point, but this accumulation of pressure across those different sliding scales.
These are the underlying factors, then, that are shaping Russia's ability to actually sustain this conflict in the longer run. And they will inevitably influence any potential path towards real negotiation if and when that happens.
Absolutely. Which leaves us with this really fascinating, maybe even dangerous dynamic right now.
How so?
Well, you have these mounting economic pressures we've just laid out. The pinching is real. It's coming from multiple directions. But at the same time, Russia currently seems to hold the military advantage on the ground.
So the economics point one way, the battlefield another.
For now, yes. And that raises a really critical question for you to think about. What happens if that economic pinch intensifies, gets significantly worse, but the battlefield situation doesn't dramatically shift in Ukraine's favor? How long can those two contrasting realities, worsening economic pain and perceived military strength, coexist? And what does that potential divergence mean for the future trajectory of this entire conflict?